What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today, BTC USD. It is the third day of December, and here we are sitting at about $92.4 thousand with 4 days and 10 hours left in this week. Hit that like button, subscribe if you want to see more content like this, and let's get into it. It's more like 9 hours and 21 minutes left in the day here. We have moved up. We've moved up a little bit, which is nice. We had a little bit of a higher high, but as soon as we got that higher high, that's exactly when we sold off. I mean, we look at this on a 4-hour time frame. It's like, oh, look, we're breaking out. Everybody goes max long. That's whenever we start to pull back. Let's look at the short-term stuff. We'll look at the 1-hour time frame here real quick. 21 minutes left in this 1 hour. I like the recovery that we're seeing here. We did drop a little bit. Good volume came in, but we're recovering. This is a good look, you guys. This is actually really nice to see. What we did was we back tested prior resistance for support. Well, we got it. We got some support here. Did the stock market open up green? Let's just see. SPX. Opened up to the downside a little bit, but that's okay. Pretty neutral open, really. Bitcoin, looking at the 1-hour time frame here, your RSI has some bearish divergence, of which you've made that move down already. Technically, this divergence was formed between this point here and that point there, and you actually saw that move go all the way back through that point. That fulfills the needs of this bearish divergence, so good job. You don't need to go lower based off of that. If you're looking at this chart and saying, I have the secret, I know the keys to the kingdom because we are going lower because of this, well, we've already done that. The move has actually already been fulfilled. We do not need to go lower because of the bearish divergence. That doesn't mean we can't go lower, but if that's your bread and butter, just understand we've already been toasted. Looking at this here, what we have is lower lows. We have lower lows in the RSI, and we have higher lows in the price. It's hidden bullish divergence. It's a good thing, not a bad thing. And we are right around the 50 area, which is a perfect area to bounce from. We have broken out of our uptrend, which could promote some consolidation here, but we could very well continue to push higher as well. Stochastics are right at a point to bounce, and the MACD is bullish overall. If we look at the 4-hour time frame, we are finding some resistance here at the overbought zone. This RSI looks like it's pointed down right now, but if this candle can come up and close green, it'll actually be pointed up. We'll be piercing into the overbought zone, and that would actually be very good. A rejection here, if this candle closes red, in other words, it would promote a rejection on the overbought zone. A rejection here might promote some consolidation, and that's fine. Maybe we pull back down to about, here, $90,000 where we found support before. Maybe we go just below there, just as we went just above here, and then we went down. Maybe we go just below here, and then we go up, something like that. Something just below 89 or 90K could be the case. Let's actually look at this real quick from a low to a high. The minimum target would be 91.4K to potentially, about 90K, maybe even a little bit below there, 89.4K, something like that at the lowest, maybe just below the 382. I can see that happening. Yeah, 89.4K, that's kind of right there with this prior high as well, 89.2, whatever, somewhere in that range at the lowest. We could go lower, but look at this, the 4 hours closing green right now, or flipping green. If the 4-hour time frame flips green, if we do close green on this 4-hour candle, we will have a upward sloping RSI. It won't be pointed. You see how now it's not rejecting the overbought zone, it's actually pushing into it. And that would, in my opinion, negate the needs that we would have to consolidate here. Do keep in mind, regardless of what happens, we move up from here, we move sideways from here, we move down from here, whatever it might be, we are likely, all roads will likely take us back up higher. We're not done with this move. We have higher lows and higher highs. I very much think that if we came down, we'd form another higher low, and that would promote another higher high. But we don't have to go down from here. In other words, just to keep it very brief, to try to summarize what I just said there, in case anybody's like, okay, so you're saying it's going up or going down. I'm saying I think it's going to go up if we close this candle green. But if we close this candle red, then I think we might consolidate. Even if this candle closes green, we could still consolidate around here, in which we need to be open-minded to the idea that we could pull back to about 89.9K, maybe at least to 91.4K, but probably something just below 90K. But above 89K would be where we pull back to. 86.8K at the lowest. We can pull back to the golden ratio. Okay? But if this candle closes green, the chances that we push higher right now are great, and we would probably push up to about something above 94K, maybe to 97K today if we can close this candle green. It doesn't mean we have to. Again, be open-minded. If we consolidate here, that doesn't mean the upside is taken off the table. It just means instead of doing this and getting there right now, we will be doing this and then getting there later. You see what I'm saying? It's still going to happen one way or another. 4-hour time frame, looking at the indicators. I like the RSI. It looks nice, kind of volatile, but strong overall. So are the stochastics. Stochastics look good here. And the MACD is crossing above the zero. Typically, when the MACD crosses above the zero, we do experience consolidation for a day and a half to 3 days or longer. So again, consolidating here would not be totally problematic. Don't get shaken out if that happens. Daily time frame, the RSI is looking good. We're breaking out of our lower high structure here, our lower low structure here. We're breaking out of this downtrend, and now we're moving higher. I hope you can see the downtrend that I'm talking about right here, lower lows, lower highs, right? We're breaking out of it and looking good, bouncing off the oversold zone. That's a phenomenal look there. Getting above the 50, we'd love to see it. Stochastics look great, and the MACD looks great. I see no reason why, again, even if we do consolidate here, why over the coming days we wouldn't continue higher. The area that we're anticipating that Bitcoin goes to is somewhere around here at these low points. If we take this high, the all-time high, back from October 6th to the low here on November 21st, our 0.5 area is right there at about $100,000. $101,000. It's also where prior support was. Bitcoin has loved interacting with its 0.5 this whole cycle. So I really wouldn't be, and specifically doing this, specifically going from the 0.5 down to the 236 and then up. So, maybe the future holds a $100,800 price for Bitcoin and then a pullback all the way back down to prices lower than where we are now, down to about 89.5K. Maybe something like that's in store. And then going into the end of the month, we'll start to really rally. Maybe none of that happens. The more conventional method of approach would be to go to the 0.5, hit the 382, kind of consolidate there, and then push higher, but time will tell. We'll see how it goes. Right now, the next target to focus on is really something that's around, I would say, about 96K to about $101,000. Something in this area here is the next area to focus on, and I think that's where we're going to go. So regardless if we consolidate here for a day or two, we're going to push higher. Whether we just push higher now, we're going to push higher. Something in this range is ultimately the next destination. Hit that like button, subscribe. Thank you all for being here. I'll see you on the next one. I've seen a couple of people trying to compare what we're doing here to what we did back here. And there's some merit to it. Higher lows, higher highs like this, kind of a parallel channel. Higher lows, higher highs like this, kind of parallel. But it's different too. There are some differences, right? Primarily, in the first 5 weeks here, if we were to look at this on a weekly time frame, the first 5 weeks here you dropped 53%. The first 1, 2, 3 weeks after that high, you dropped 39%. Here it took you 1, 2, 3, 4, 5, 6, 7, 8 weeks to drop 30%. Which is a lot. 8 weeks versus 5 weeks to drop 30% instead of 53%. That's a big difference. And 1, 2, 3, 4, 5, 6, 7, 8, 8 weeks to drop 35% as well. So 8 weeks to drop 35%, where here it was 3 weeks to drop 39%. 8 weeks to drop 30% here, where it took 5 weeks to drop 53%. A bit more of harsh drops here, and typically that's how you see bear markets start. They start with a bang, right? Bull markets start with a bang, they end with a bang. We didn't really end with a bang here, and bear markets start with the bang, they end with a bang. We didn't really start with a bang here, so I don't know if it's exactly the same. Plus the indications on the monthly RSI are completely different. Yes, we have bearish divergence here, but the bearish divergence that we experienced here has already fulfilled itself. We've already seen the move. The divergence happened here between these points. We already saw the move. Divergence between these 2 points. We already saw the move, right? Divergence between these 2 points, we had the move. We did have some hidden bullish divergence, just like we do now. There is some merit, and to be fair, this hidden bullish divergence was right at the 50, just like we're at right now. But the stochastics were not at the 50 like they are now, right? We're right at the 50, ready to bounce. This is more comparable to this point here, rather than this point here, based off the stochastics, in my opinion. But we can argue about this all we want. I'm really just trying to talk about it because I think I've seen a couple of posts on X.com, so I'm sure a lot of you will as well. X is like a bird box, and everybody just regurgitates the same information thinking that they know something because they all agree on the same thing. So if you see this, if you see people comparing those, I would just say it's not completely obscure. It's not completely irrelevant to compare these together, but I would also point out that the differences are pretty vast, and that, in my opinion, those differences are enough to suggest that we actually do move higher. I don't believe that we're in a bear market. I very much believe we're in a bull market still, and I think the reaction that we're going to see here is going to be completely different than the reaction that we saw here. And in fact, it already is very different than what we saw back here, right? Back here, you found support. Where'd you find support? Nowhere. There's no prior all-time highs over here. Nowhere. Here, where'd you find support? Right here at prior highs right here. Here, where'd you find support? Right here at prior lows right here. Right? You're finding support at areas that kind of makes sense, versus here you were in no man's land. You were far away from any structure, so you had to pull back to find support. I don't know. And you don't have to. But another thing too on the monthly time frame is that, the RSI. Let's look at Bitcoin here on the all-time history index. The RSI here, I mean, look at that. I'm glad I already have the line drawn up. The RSI hasn't even interacted with what we've seen historically with other cycles. And again, to compare, if you want to compare this cycle to last cycle, let's be fair then, all right? Let's compare. You want to compare this to this, that's fine. Let's be fair. This happened after an immaculate rally that lasted for 6 months in a row. This happened after a very weak rally that did not last for long at all. I mean, we had months of growth consistently, about 4 months of growth here, but it was not a bull rally. It wasn't like we historically have seen the bull market peak. We did not get above the 90 on the monthly time frame on the RSI, which we have every single cycle at least done that. We haven't done that here. And then, of course, the reactions are entirely different. You want to compare this. Bull markets end with the bang. We didn't have that here. Bear markets start with a bang. We did not have that here. So sure, they look similar, but they are acting different, right? It's like if you have twins, but they're acting different, that doesn't mean that they're the same people. That doesn't mean you're going to get the same results, right? In fact, because of different behavior, you're probably likely to get different results. There are some similarities. I don't want to discount it entirely, but I don't buy it personally. I don't think anybody should. Anyways, hit the like button, subscribe. We're still in a full-blown bull market, you guys. Higher lows, higher highs. I got in an argument, it was not an argument. Somebody wrote a smart-ass remark on my x.com. I forget what it was entirely, but they were like, how many indicators do you have that suggest we're in a bull market? None. There's not a single indicator that suggests that we're in a bull market. All I said was higher lows and higher highs, because that's what we have. We have higher lows and higher highs still. How do you know we're in a bull market? There's no evidence that we're in a bull market at all. Higher lows, higher highs. Until that breaks, you've got nothing. Until that breaks, the bulls actually have everything. That's the truth. Hit the like button, subscribe. I'll see you guys on the next one. Take care of yourselves. Bye-bye.